So this is question 1 from page 571 in your EdCo book. So Dara Duff has the following assets and liabilities and capital at the start of the year. So the start of the year is the 1st of January 2013. Okay, so these are his assets and liabilities at the start of the year. So we've got fixed assets, we've stock, we have debtors, and we have cash in the assets section. And we also have creditors in the liability section, which gives us a capital then of €560,000. Now I just wanted you to look down here at the bottom and see, well, what are we actually asked to do? We're asked to do a cash budget showing Duff's expected monthly receipts and payments for the 5 months, January to May. And then we're also asked to do a budgeted balance sheet. So some of this information up here is for the budget, and some of it also then feeds into the balance sheet. Okay, so the first thing I want you to look at in terms of the actual cash budget, our opening cash figure. How much cash did we have at the start of the year? Well, we know what our information from the start of the year is up here, and we have a cash here, so that €5,000 is actually my opening cash figure. So you'll see me putting that into the solution now, into the answer. Okay, into my answer. Then it says the expected, I'm now looking at here at the second box, so the expected sales and purchases for the next 5 months are as follows. So we have sales of 100,000 in January, 70,000 in February, 90,000 in March, 120,000 in May, and 120,000 in April and 80,000 in May. Similarly, we have our purchases 78,000 in January, 56,000 in February, 80,000 in March, 74,000 in April, and 65,000 in May. And we've got a total there. So it gives us some additional information then. It says down here some additional information. All sales are on credit and are paid for 1 month after sale. Okay, so what does on credit mean? It means that they get the goods now. So we sell them now to them, so they actually receive them now, but they're not going to pay us for 1 month. Okay, so the sales that happened up here in January, we won't actually be getting that money until February. And February sales will be paid in March. So we're going to need to make sure we're putting them into the correct months in the cash budget. In your cash budget, you're showing when you get the money. Not when the sale happened, when we receive the money. So this sales of €100,000 in January, we won't be paid that until February. Okay, and I'll show you then what goes in to January when we get to it. All purchases are on credit except for €10,000 in March and are paid for 1 month after purchase. So all purchases are on credit, which means that we get our purchases now, but we don't pay them back for 1 month. Okay, except for in March when we had, we obviously got some purchases and paid in cash. Okay, so we need to be careful of that €10,000 and March. So if you want to put a little asterisk beside March, you can do. Okay. Wages are to be, I skipped one. Duff rents the premises for €30,000 per annum payable each month. So €30,000 is for the whole year. How many months are in the year? 12. So you're going to divide that out. Wages are to be €7,000 per month, straightforward enough. You're just putting €7,000 into each month. Equipment is to be bought in February for €24,000, so that's money going to be going out in February, and we need to be careful of that when we're doing our balance sheet because equipment, as you know, is a fixed asset. Closing stock at the end of the year is expected to be €12,000. We're told that for the balance sheet, and net profit for 5 months is expected to be €31,500. Also told that for the balance sheet. Okay, so what we need to be careful of here is the €10,000 of cash purchases, and also that all sales are on credit. So let's have a look here now. This €100,000 here of sales in January won't be paid until February. Okay, we won't actually get that money until February. So are we going to get any money in January? Well, yes, we are, because as you can see up here at the start of the year, we have €50,000. Can you see debtors? €50,000. Okay, so a debtor is someone who owes us money. So at the start of January, we are owed €50,000. And that €50,000 is for sales that took place in December. So the sales that took place in December will not be paid. We won't be getting that money until January. So that €50,000 is going to be our January figure. That's what we're going to be paid in January. Then this January figure, the January sales will be paid in February. So up here, we have December sales. So our December sales of 50,000 will be paid. We will get that money in January. January sales, we'll get that money in February. In February sales, then we'll get that money in March, and so on. Okay, so we'll go through that when we're doing the solution. So at this point now, we've read through the question. We're ready to get going on the answer. So we're ready to go now on completing the cash budget for January through to May. So you need to have a column for each month. So one for January, February, March, April, May, and then a total column as well. And I didn't rule them out, but of course you can. That's no problem. So the first thing that goes in is your receipts. So you're always starting off with your receipts, and then you're going to have your expenditure after. Okay, so our receipts in this question, the only form of income that we have in this question is our sales. Okay, so sales are going in, and we're saying we need to put in when we actually receive the money. Okay, so we know that our sales are on credit and are paid for 1 month after sale. Okay, so always your January figure. Okay, if they're telling us that our sales are going to be on credit and they're going to be paid 1 month, our January, the amount that we are going to get paid in January is our opening debtors figure, which is 50,000 in this question. Okay, so we are going to be paid that 50,000, which is my debtors figure in the assets at the top of the question. €50,000 will be paid to me in January. Okay, then my sales I will carry out some sales in January, and they will be paid in February. So my February figure is the €100,000. My March figure is going to be the sales that happened in February, which is €70,000 worth of sales. In April, I'll be getting the money from March's sales, which is €90,000. And in May, I'll be getting the money from April's sales, which is €120,000. So my total there is going to be €430,000. Okay, and then my total, if you had more than one source of income, you'd have to add the two of them together. We only have one, so my total is going to be the same. Okay, so 50,000, 100,000, 70,000, 90, 120, and 430. So next, you're going in with your expenditure. Our first form of expenditure is our purchases. So we're told all purchases are on credit except for 10,000 in March. Okay, so again, similar to the sales and using my debtors figure, my first figure, January figure, is going to be my creditors. So I'm going to have to pay off that 45,000 that I owed in January. Okay, so my purchases, I actually got the purchases in December, but I'm paying them for them in January. So my first purchases amount that I have to pay is my 45,000, which is my creditors figure in the small balance sheet that we have, or the list of assets and liabilities. Okay, from then on, we are paying for our purchases again 1 month after purchase. Okay, because we're buying them on credit. So my purchases that I got in January, the 78,000, I'm going to be paying for those in February. So that money will be going out in February. So I'm putting them in there. 78,000. Okay. In March, I will be paying for February's, which is the 56,000. Plus, in March, I made purchases of €10,000 using cash. Okay. So my 56,000 plus the 10,000 in purchases that I paid for using cash, that brings it up to 66,000. So just to recap there. In March, I have to pay for the purchases that took place in February. So if you look at the question, our February purchases figure is €56,000. But underneath the additional information, it says we bought €10,000 worth of purchases using cash in March. So if we got them in March and we paid using cash, we paid for them in cash straight away. So it's your 56 plus your 10,000. So that's why that's 66. Then in April, you would usually pay for March's purchases. Okay, so our purchases figure in March was 80,000. But of that 80,000, 10,000 was already paid. So we have 70,000 left to pay in April. Okay, and then in May we have to pay for April's purchases, which is your 74,000 euro. Okay, and that gives you a total of 333,000 euro. Okay, our wages then, it says wages are to be paid 7,000 euro per month. 7 every month. So that gives us a total of 35,000 euro. Duff rents the premises for 30,000 euro per annum. I don't know why I keep saying annum, payable each month. Okay, so 30,000 euro we're paying it each month. So rent, if it's 30,000 euro for the year, and we know it's been paid monthly, I'm just going to do it up here. 30 divided by 12, which is 2,500 euro per month. Okay, so 2,500 euro each month. Which is 12,500 euro in total. Next is our equipment is to be bought in February for 24,000 euro. So we're buying a piece of equipment. And that is bought in February for 24,000 euro. So 24,000 euro. And that is all of my expenditure. Just put that in the total as well, 24,000 euro. So now I need to add up my total expenditure. So I'm going to do that by adding. Okay, so you're adding just your expenditure, and I'll just do a little heading, total expenditure. So you're adding these guys here. So we have 54,500. Then we have 111,500, 111,500. We have 75,500. We have 79,500. 83,500. And 404,000. So if you have time in your exam, I'm after adding these four guys up here to get that figure. Double check by adding these all up, and you should also get that. If you don't, you've gone wrong somewhere. Okay, so that's my total expenditure. The next part is where I need to calculate net cash. Okay, so net cash. Net cash. So my net cash is my total receipts minus my total payments. Okay, so if you want, I'll mark it A is my total receipts, so this figure here. And my total payments or my expenditure is here. Okay, so my total receipts minus my expenditure. So money in minus my money out. So how much do I have left over? Well, let's have a look. In January, we have 50,000 coming in, but we have 54,500 going out. That's not good. We've got more going out than we have coming in. So automatically, I know straight away that's going to be a minus. So 4,500 euro is going to be my minus figure. Okay. We'll do all of my net cash first. So up here I have 100,000 coming in February, and I have 111,500 going out. Not good. We have another minus 11,500. In March we have 70 coming in and 75 going out. This is not good, guys. We've got minus 5,500. April we have 90,000 coming in and 79. Okay, great. First time we have a plus. We have a 10,500 plus there. And in May, we have 120,000 coming in and 83,500 going out. So that's good again. We've got a plus there. And that is a plus of 36,500. And in total, we have 430 coming in and 404 going out. So we have a plus overall of 25,500 over the 5 months. Okay. Next, you're going to put in your opening cash figure and closing cash. So you're always going money in, money out, net cash, opening cash, closing cash. Okay. So my opening cash. Where do I get this figure from? Well, I flagged it when we were reading through the question. What amount of cash do we have at the start of the period? Well, in our list of assets, we have cash. So it says the following, Dara Duff has the following assets on the 1st of the 1st. We have a cash figure there of €5,000. So that is my opening cash. So the opening cash figure is €5,000. So you're getting that from your list of assets. That will always be given to you guys. You don't have to guess that or try and figure it out yourself. Now, we are doing 5 months. So my opening cash at the start of the 6 months has to go in here as well, because this column here is for the whole 5 months, okay? So at the start of the 5 months, I had €5,000 opening cash. So it goes into the start of January and into the total, okay? So at the end of January, I had a minus 4,500, but I had 5,000 there to begin with. So that left me with a plus 500 at the end, okay? So it's your net cash plus your opening cash gives you your closing cash. So I had 500 left over. That then goes up to, that's my opening cash for the next month. So we went to bed on the 31st of January. We woke up on the 1st of February with €500. We had minus 11,500 net cash. We had €500, which means that my overall, I had a minus €11,000. Okay, bringing that up, minus €11,000. And that 5,500, and we went minus another 11,000, which gives me a total of minus 16,500. Then bringing that up, we have 16,500 opening cash minus. So at the end of April, we had a plus 10,500. We were carrying a deficit of 16,500. So in the end, we ended up with a minus of €6,000. Bringing that up as my opening cash of the following month, so minus €6,000. And that gives me a closing cash in May of 30,500. Okay, now let's double check. So at the end, these two figures should always end up being the same. So we had 25,500 plus another 5,000, which gives us €30,500. Okay, and that is it. That's it done. Okay, so you want to go along with your ruler now. I'm just going to do this really quickly. You should be going along with your ruler and closing off the whole thing. And you will know you're right if these two figures end up being the same. So put in your information. Your net cash is your total receipts minus your total expenditure. That gives you your net cash. Your opening cash will be given in the question, and then you use that, you add the two of them together to get your total cash or your closing cash. Your closing cash for 1 month is your opening cash for the following month, and so on. Okay, so you've got your net cash plus your opening cash, which will give you your closing cash, and bring that up. Okay, and these two figures should end up being the same. So you don't carry that up there. So you need to make sure that you're putting the €5,000 into your opening cash, or else you'll end up continuing on like you have done by putting that up there, and that would be wrong. Okay, so make sure your opening cash goes into the first month and into the total always. Okay, and you'll know you're right by having these two balancing. The second part of the question is we need to complete a budgeted balance sheet at the end of May. Okay, so not the end of the year, the end of May, the end of the 5-month period that we're after in the budget for. So we're looking to see, well, what would our balance sheet look like at the end of May? So we're starting off, as always, our balance sheet always begins with our fixed assets. So we have a figure of fixed assets of €510,000, and I'm getting that figure from the list of assets and liabilities that's given to us at the start of the question. So we started off with €510,000. Now, do we buy any assets or do we sell any assets? Well, I know I definitely didn't sell any. I didn't sell any up here, but I definitely did buy one. There, I bought a piece of equipment. Equipment is not just a standard purchase, it's a purchase of a fixed asset. So we had fixed assets worth €510,000, and I'm after buying another piece of equipment worth €24,000. So my total fixed assets figure is €534,000. So I always need to check, well, did you buy or sell any assets? We generally always buy one. Okay. Next is current assets. Okay, current. And one current asset I know I always have is my closing stock. Okay, stock. And that is given to us in the additional information part of the question, and it's expected to be €12,000. So I'm stepping this in a column. Okay, you only need 2 columns in this. My cash, I also have cash. I clearly have cash left over here. So you put your total into your balance sheet. So we have a plus 30,500. So that's an asset. That's good for us to be having that money, 30,500 euro. Then we have debtors. Okay, so a debtor is someone who owes us money. Well, who owes us money in this question? Well, we made sales in May and they're not going to be paid until June. This balance sheet is at the end of May, so we are still owed that 80,000 euro. So that's going in there. So that 80,000 euro is I'm just write it here for you. Don't make sure if you're answering this question, you don't actually do this. That is my May sales. So the sales that took place in May won't be paid until June. So that is money that I will be getting within the next year or within the next couple of months. With 80,000 euro should be paid next month in June. Okay, so my total current assets is 122,500. Okay, and I have less creditors, amounts falling due. Amounts falling due within 1 year. Okay, so who do I have to pay back within 1 year? Well, I made purchases in May and I don't have to pay them until June. June is within 1 year, so therefore my creditors figure is 65,000 euro. That is the only amount that we have, and that is my May purchases. I'm only writing those two there for the purpose of your understanding. So 122,000 euro 500 is going to be coming into the business within the next year, and 65,000 euro will be going out. So I'm subtracting that. So my working capital then is 57,500 euro. And I'm adding that to my fixed asset figure to give me a total net assets figure of 591,500 euro. And that's my first balance. Okay, just underline that there. And that is my total net assets. Okay, finance by. Well, where do we get this money from? Okay, so finance by is always our last section. Financed by. Well, we have capital. Okay, we had our capital at the start of the year. Our capital figure is 560,000 euro. So at the start of the year, that's coming from the list of assets and liabilities. We had capital of 560,000 euro. We also have net profit. We are budgeting to make a net profit of 31,500. That's coming from the additional information. The very last point G, net profit for 5 months is expected to be 31,500. And you add those two guys together, and that gives you your capital employed figure of 591,500 euro. Capital employed. And I am underlining that. Okay, and that is that done. So it's your standard balance sheet. It's a bit of a skeleton. There's not much in it. You start off with your fixed assets as always, then your current assets less your current liabilities, your finance by, your capital, your add in your net profit, and that gives you your capital employed. And that is that question finished.